Hey, it's Navy Dowdy here in the Chicago area in the Midwest in the great United States. This week we're going to ask the question, did your withholdings and estimated tax payments equal your tax due? And should it? For people with just one or two W-2s and perhaps a daycare deduction, getting the amount of tax paid into the IRS to come out correctly is easy enough and can be done with 95% accuracy. The IRS gives the following instructions. All taxpayers should review their federal withholding each year to make sure that they're not having too little or too much tax withheld. Doing this now can help protect against facing an unexpected tax bill or penalty next filing season. The sooner the taxpayers check their withholding, the easier it is to get the right amount of tax withheld. Taxpayers whose employers withhold federal income tax from their paycheck can use the IRS tax withholding estimator to help decide if they should make a change to their withholding. This online tool guides users through the process of checking their withholding to help determine the right amount to withhold for their personal situation. Taxpayers can check with their employer to update their withholding or submit a new Form W-4 or the employee's withholding certificate. For people with more complex filings, like the self-employed and investors, it can be more difficult, but here are some blue sky rules about paying estimates based on last year's tax that can help keep the penalties away. From a tax planning perspective, the goal is to examine the ROI, or return on investment, of the use of the tax due over a period of time and the risk of loss of capital or risk of performance. So for an example, if a business owner thinks he's going to owe between $10,000 and $15,000 in tax, but is not sure of the exact amount as he has not completed the company books and last year paid $10,000 in taxes, then the IRS would advise that you should send in $11,000 before April 15th to avoid the underpayment penalties. They will still charge interest on any tax that is still unpaid after the deadline, just not a penalty. To avoid interest, the IRS would advise, when in doubt, simply overpay to be sure. If you think you're going to possibly owe $15,000 and you send in $18,000, then when you file there will be no penalty or interest, and you will of course be paid a refund of the overpayment when calculated. However, for the business owner or entrepreneur, allowing the IRS to use your capital for free may come at a cost, so it needs to at least put into the equation by the tax planner. If the $18,000 would buy additional spring inventory that represents a 50% profit, and the business reliably sells through 100% in good years and in bad, and then the $18,000 would represent a return of an additional $9,000 of growth profit, and even minus the hard cost in distribution, maybe $6,000. So the question is, will the IRS penalty equal $6,000 for underpaying $15,000 for 5 months? And the answer generally is no, not even close. The IRS is a business, so if you are also a business, a stock trader, or any other kind of non-W-2 wage earner, then these calculations become just another business decision. If your tax preparer does not have these kinds of conversations with you, then you need to find a new one. I'm Navy Dowdy, and remember, financial fitness can be beneficial to your wealth.